morning. You're watching The Market right here on ET Now with me, Ayesha, Faridi, Avanne, Dubash, Nikunj, Dalmia in the studios. And what a week it has been, the last one. Started off with a bang, saw some consolidation coming in, and then again finished off the week as well with another bang. We've made it to that 21,450 print, and this move has really come in at breakneck speed. In fact, we managed to gain for a seventh consecutive week on a trot. The Nifty Bank has managed to scale that peak of 48,000 for the first time ever, and the mid-cap index as well is chugging along. They're not seeing, or rather you're not seeing, any kind of abating or pause for the mid-cap and the small-cap universe, even though year-to-date they've been much bigger outperformers than what the Nifty has done. There too, the momentum is pretty much intact. And what a comeback by the FIIs.
Ayesha, look, whichever way you look at the market from October end, 1 week, 2 weeks, 7 weeks, 1 day, 3 day, the market action has been absolutely breathtaking. And rarely you would see actually this kind of a price action. In fact, we've only seen this kind of a price action only 4 times in last 10 years in terms of concentration. So the pace of the rally is nothing short of breathtaking. Now, are we reaching that zone of irrational exuberance, lot of froth, or there could be an extension to the current move what we've seen? The way I look at the setup is that there are 2 weeks left for this calendar year, and how much markets will hold on for that January effect. Actually, not even 2 weeks, frankly, Ayesha, 1 week, because technically, last week there is a holiday, and then truncated week, and really get into this, New year-end phenomenon. Yeah. So this, in a sense, is going to be the most important week. Now, this week, the ability of the market to hold on to higher levels will truly be tested, because there is no calendar event, there are no big news triggers, there is no IPO listing, there is nothing which will come from Fed, and there is nothing in the local market which in a sense could be called as a trigger. So now the next 8-10 trading sessions would be the ability of the market to simply hold on. And for that, the most important aspect would be foreign institutional investors. And if I really want to, we've used the word FOMO in a very casual manner. But sometimes when you really understand the meaning of it in terms of market psychology, it is what FIIs are doing.
Yeah, it's real.
It's real.
Yeah.
The kind of money which is coming back into the market from foreign institutional investors is nothing short of unreal. Now, if the flows have at this quantum will continue, who's to say markets will peak out? But if flows don't continue at this current level, then it will not hurt you if you start taking some profits off the table. We've been discussing this aspect that, if you move 15 to 20% of your portfolio into small to mid cap to large cap stocks, that's been a rewarding strategy. So at the current juncture, the ability of the market to hold on would be tested. Liquidity, I think, would be the most important indicator, especially what FIs would do. But if you're looking at investing fresh now, I think the risk reward ratio is less than 1. When I say less than 1, when you toss a coin, it's a 50-50 probability of getting heads and tail. I think the chances of making money in the short term in small and mid cap stocks is not even 50% now.
Okay, that's if you're looking to invest afresh in the markets. And yes, FIIs have clearly been at the forefront. In terms of the numbers, what we've seen in the last 6 days is 2,000 crore plus of FII buying into the Indian market. On Friday's trading session alone, there was about 9,000 crores worth of buying, so the biggest net buying that we've seen in the last 5 months, as our graphics have been reflecting. A quick check-in on the global screen as well, where you had the the US markets, which ended pretty mixed on Friday's trading day, although the futures are indicating a positive start. You've got the Asian markets as well looking a little bit mixed, and you've got the Bank of Japan that will be meeting for the last time this year, so that's closely going to be eyed. But yes, in terms of data points, not too many, but there is quite a bit of action, Nikunj, in the primary markets with respect to a number of IPOs that are set to come out this week. Inox India, DOMS, India Shelter, etc. Those are going to be some listings, and then Muthoot Microfinance, etc. all will be looked at.
7 IPOs this week.
Yeah, the IPOs opening versus the listings. I think the listings are the one where the market action would be concentrated, especially if you look at Inox and if you look at DOMS. Given that Inox group of companies in a sense of late have been really the darlings in terms of what they are. Inox India, well, it's a niche company. It's a business which, in a sense, is a high engineering business, a complete beyond manufacturing. So that would be in talking point. Second, DOMS. Again, the entire stationery space has seen a couple of debuts. I didn't realize that the size of that market is so long till the time some of these companies actually started going public. So interesting listings. I don't think there is. You cannot compare this week's primary market action with what, let's say, happened with the Tata Tech or with IRDA. But yeah, from a market standpoint, these are two listings which would be important and which in a sense will keep the momentum going. In terms of new openings, well, Suraj Estate, a real estate company, very interesting, Bombay focused, good company in terms of what they have in terms of the current land bank and where they're taking it up. Muthoot Microfinance is not really the hottest kind of in space, so that in a sense is interesting. And then you got RBZ Jewelers. Again, small but very niche, and again that's the area where interest of late has been nothing short of unreal.
Oh yeah, and absolutely. The last few IPOs as well from that space, Senco Gold, which the street didn't think is going to be that big, but look what happened since listing.
So you think about Titan. Titan has reached a market cap of 3 lakh crore. That is the pivot. Then you look at the second one, Kalyan Jeweler. It's been a fantastic year for Kalyan Jewelers. You may say that, okay, Indians are, the love for gold never finishes, and the big fat wedding or the fact that there's disposable income which is coming with urban middle class. I guess the jewelry demand in a sense in India is still very linear per se, and then the underlying strength in gold also is adding to the entire excitement in that space. Then Senco Gold, like Ayesha said, again, it's been a good debut, it's made money. So typically when a sector is in a sense enjoying leadership, and when the mid-tier stocks, they do well in a sector, the IPO markets, they always tend to get vibrant. So you had the which is at an all-time high in terms of market cap. You've got the smaller ones which are commanding decent amount of premium, and then new listings are happening. This is the same sector where we've had trouble in the past. The same sector where you had impact of COVID, you had a couple of companies, PC Jewelers and all, which had their own issues. So this was in a sector not very exciting, but it's a small listing. It'll keep everybody warm.
Okay, action-packed week when it comes to the primary markets. Let's also hear it out from Manish Dangi. He's talking about the impact of US Fed rate decision on Indian equity markets, says that long gestation assets will benefit quite considerably in the times to come.
Any long gestation projects where the cash flows are out there in distant future, should feel relieved. So venture capital, private equity to a certain extent, generally long duration equity like tech, should benefit apart from, of course, bonds. What can finance do in India and other sectors do? There are many other variables to discuss. Real estate doesn't have a way to actually price future so well as equities do. And so to that extent, it's not reflected. It sort of comes as it happens, as demand comes up, as the inventory unwinds, real estate gains traction. I think we are in a very longish bull market, and real estate would do very well. If you find a decent opportunity with a decent 2-3% rental yield and a city center places in Bangalore, Hyderabad, Bombay, Delhi, they may end up delivering you 10-11%, which isn't sort of dramatically different from what equity large caps would do for next 5 years.
All right, let's move right on then and get a sense as to what exactly the outlook is when it comes to the global commentary. We've got Lisa here to sum it up for us. Lisa?
Right, so let's look at some important global commentaries coming in. Mohammad El-Erian, he has focused on the central bank. That will be the focus this week, and Bank of Japan also. They will be holding their policy meeting, as well as Fed speakers. He says that the action on the Fed speakers talking about the recent Fed move, that also will have an implications going forward. Moving on to Lawrence Summers, he views the current market view of soft landing as well as Fed Reserve cutting rate hikes next year. He sees that as possible, but for now that is not on his list and center of his expectations. expectations. Moving on to Holger, he has marked the Goldman Sachs raising the S&P 500 target for next year, and this represents around 8% upside from the current level. So according to him, the decelerating inflation as well as Fed easing, that will keep the real yields low, and it will support a PE multiple of around 19 times compared to a PE multiple which was earlier envisaged for 2024. So that's the important global commentaries coming in from across the globe.
Lisa, we'll leave it at that. Let's move on and let's talk about what the market setup is looking like. The comeback of IT and the kind of strong show that you had from the banking pack. But before that, let me take it across to Naresh, find out what on the charts his reading has been. Naresh, hi, good morning. Excellent week. Consolidation and that again move up on Friday as well. What's in store for us this week?
So the best way to play this momentum has been to continue to ride it on, and overbought conditions can continue much higher is what the general assumption is whenever a trend starts. So we've touched the first target zone of 21,200, 21,500, and now a little bit of a pause in the index could be normal. So expecting some bit of a sideways consolidation wherein we don't break any levels, but we remain at the same place. And stock-specific action continues. Same is the case with the Bank Nifty as well. But relatively, Bank Nifty has a few more legs left in terms of momentum, because we are seeing fresh breakouts happen in some of the large banking names. So we are seeing a good breakout happen in the SBI. You have a IndusInd Bank which is breaking out. We are yet to see a similar breakout in HDFC Kotak Bank, but the larger names are breaking out and holding on. So Bank Nifty could continue to outperform. The trend is still up. And the best way to right now ride is to keep a trading stop loss.
That's the interesting thing, right, Nikunj, in the market. While banks continue strong, you are seeing participation within banks from the laggards. And then the most laggard of the sector, IT, is now making a comeback across the board.
Yeah, unexpected, I shall tell you why. Because the general assumption is that if US slows down in the short term, they will have to take a hit in terms of their visibility. Now, the reason why IT is moving higher is because it did not participate. And these stocks are not at an all-time high. So the headroom for markets now to buy something which has not participated, or something where in a sense there is going to be this entire catch-up effect, I think is clearly visible. Now, what do you look at IT? Well, there are two ways to look at IT. That's price to PE, not PB. Stocks cannot trade at a price to book of 26 times. Where is IT trading? If one really looks at the IT stocks right now, well, IT stocks right now are not trading at levels which are below their historical average. They are just in and around there. Second, the AI threat, I think, is real. See, whatever is happening in US markets, I think that if the economy slows down in the near term, first there would be more, there would be more contraction, and then it's only in the second half of 2025 the repair will actually start. Surprisingly, IT Ayesha this year has done much better than banks. Nobody anticipated at the beginning of the year that despite guidance cut, management commentary, delay in order books, no hiring, issue in terms of where the AI is going to be changing the business model, IT has done much better than the banks. And the simple logic here is that this is a complete contra trade which people are buying, thinking that this year the turn in a sense IT, the downturn in the sense for IT would be over. So I don't think from a risk reward ratio standpoint there is going to be big money to be made in IT here, in large cap IT services. Small companies, you got to pick your spots there. I mean, there are so many niche players, those companies are doing such individual things which are so strikingly different. That's a very different and a very, separate conversation. But in general, maybe I've got it wrong, or maybe that's the way I think. I think IT in a sense right now does not give you that kind of a launch pad for a great return for 2024.
Kunal, what's your take? Nifty Bank, Nifty IT, what would you pick?
Because you've been recommending a lot of large cap IT.
Yeah, so I'll probably go with large cap IT stocks even at current levels, because so adding to the point where Nikunj was mentioning, there are a lot of large cap IT stocks which have been huge underperformers. Now, when I look at the charts specifically for the likes of Wipro, I think that stock has been a rank underperformer both, whether it was 2020 rally for the stock, or whether it's a point where the stock has corrected from the 2021-22 top for itself. So I would probably expect this, few large cap stocks to make a comeback for themselves, at least try and cover up the underperformance or the stark underperformance. And on the other hand, there are also a lot of indicators on the indices, both on the Nifty and the Bank Nifty, which are now getting into an extreme overbought territory on the daily chart. So that could also result into a pause on the benchmark indices, and the other sectors which have been underperforming, they could probably be seeing some good momentum.
All right, let's find out those trading recommendations as well. And Kunal, is there IT on your radar this morning?
No, not really on the IT stocks, but I'm banking on few of the large cap names. So SBI is the first stock which I would recommend as a buy. The stock on Friday saw a very good streak of momentum, a breakout of a triangular pattern for SBI. So would suggest a buy, revising the targets higher given from 650, 660 to now 680 levels. Traders could look at a fresh buy with a stop of 625. And the second would be a buy on Tata Motors. Even this stock is making a comeback about that 740 mark for itself. So would suggest a buy with a target of 780, stop loss at 710.
Right. Naresh, what's on your stock specific list?
So first remains a buy on SBI, clean breakout into new all-time highs, good momentum and price action. Also the fact that the stock has been a relative underperformer in the last 1.5 year to the whole PSU banking space. We could see a big catch up here. A stop loss at 620 and a target price of 720. Second is a buy on ONGC, which looks promising, which has given a 5-year breakout. The stock used to be 190 back in 2017-18. And in 2021-22, when the peak was around 190 levels, on the peak of Russia-Ukraine crisis, finally those levels have been crossed and the stock has been sustaining for the last few weeks, expecting this to make a quick move towards 220 plus, stop loss at 196.
All right, there you have it. Those are all your top trading recommendations being flagged off by our chartists. What about stocks that are in the news, stocks that we need to track? Let's connect with Sumit. He's right here with us in our studios to discuss that. And key updates coming in from United Spirits.
Well, one of the institutional customers, now they have not named who's this customer, but it is most likely the Army Canteen, and they have now United Spirits have received a claim of around 365 crore rupees from their institutional customer, that is most likely the Army Canteen. Now this Army Canteen claim that has come in is incrementally negative for the company, because if this goes through, it would be again a provision for the company. This is a big amount for United Spirits. Also do remember that CSD contributes around 4 to 5% of the company's revenue. Now at this point we cannot definitely say whether it will impact the volumes or not, but this will definitely have a negative bearing on the volumes, given that there is a claim coming in from one of the major institutional clients, which means that there were some issues with the volume or with the billing. So that's one of the key negatives that has come in. Now also this is important for United Spirits, because every year we have seen some or the other kind of provisions coming in. Now in 2020 it was the Raise the Bar program that the company had started, which led to a provisioning of around 75 crore odd rupees. Then there was supply chain agility program that the company has started, which also had a hit on its profitability. Then there were some bad debt provisionings that had come in for United Spirits, and now this claim coming in from one of the major institutional clients for United Spirits. Now over the medium term, there might be many positives for United Spirits, given the fact that there is a UK FTA that will be signed. RM prices are expected to soften going forward, and then there is a premiumization trend that could benefit United Spirits. But over the near term, there are many headwinds for the company. Firstly is the fact that RM prices have increased, that is raw material prices have increased. There are higher advertising spends for the company to boost their volumes, and obviously we are not seeing such kind of a great demand coming in for United Spirits going forward. So near term there are headwinds. Over medium to long term there could be some tailwinds for the company, but this news coming of this claim is again negative for United Spirits.
See, Sumit, to understand, no pun intended, to understand the spirit of the claim here for United Spirits, it could be challenged, and this is not something which is going to be taking a P&L hit per se. So I don't think you can say that, okay, this claim which has come, that automatically means that is a claim which in a sense will have to, it really has to be honored, one. Second, if you look at United Spirits per se, it's underperformed. It's underperformed at Radico, it has underperformed at Tilaknagar, it has really underperformed the entire sector per se. For a sector where we all thought that there is going to be a standard growth because of per capita consumption trend changing, things changing in terms of how Indians would be consuming, and how they would be moving in terms of the pedigree category. This is one category where we are talking about luxury spend, we are talking about luxury cars being sold, luxury homes being sold, fancy mobile phones being shown. Frankly, for the segment per se, we've not seen that kind of a premiumization wave, and United Spirits is trying to really latch on to it, but it has not latched on to it. So if you look at the YTD change of United Spirits versus Radico, throw in a Tilak Nagar. Are we missing on anybody else? Tilak Nagar, United Spirits, Radico.
Yeah, major
ones. It has
listed.
underperformed.
Yeah.
It has
So,
underperformed.
this continues.
Small. I mean, see, you're talking about the premiumization wave in every category. From cars to mobile phones to luxury. You would imagine that the liquor segment, which in a sense is the first appeal and affordable luxury, should have seen a huge wave. But that unfortunately is not translated into a real deal for United Spirits.
Okay, the other one, Ayesha Motors. What's the news here?
Well, Citi has actually increased the target price for Ayesha Motors by around 500 odd rupees from 4,200 earlier. It has increased the target price to 4,700. Now, they have reiterated their positive stance on Royal Enfield's positioning as a premium bikes in the premium bike segment. Now, they're saying that the recent volume trends for Harley Davidson and Triumph have been given the fact that we have seen a sharp decline in the month-on-month volumes in the month of November. Now, for Harley and Triumph, they are saying that both are iconic global brands and their presence cannot be overlooked. But the fact that these two brands, the impact that they would have on Royal Enfield has been overestimated by the market, and that is what the Citi note is saying. Now, they're also saying that the volume trends from Royal Enfield have been encouraging. On a month-on-month basis, in the month of November, we did see a decline, but the decline was much lower than its peer at around 5%, and this was also owing to the festive related seasonality that we had seen. Overall, they have upgraded their EPS and volume outlook for Royal Enfield. Volume outlook have been increased by around 2 to 5%, and the EBITDA estimates have been increased by around 2 to 6%, and EPS estimates by around 3 to 7%. Overall, they are bullish on Ayesha Motors, given the fact that they are not expecting Royal Enfield and Triumph to have a bigger impact on the volumes of Royal Enfield.
Time and again, Ayesha has demonstrated their ability to really maintain their market share and their leadership in this entire premium biking segment. Now, it's not for the first time their market share has been challenged, but it's multiple times their market share has really been challenged. And the fact that Ayesha still really is the first port of call in terms of an experiential or premium biking segment, it just tells you that what is the kind of recall they have in their portfolio. I mean, once upon a time, Ayesha, there were 12 auto companies in India, but how many have survived? I mean, not every auto company has survived, right? The Americans have gone and the Europeans have gone. It is only Maruti which dominated the small car segment for the longest time, and it is still dominating that. And I think that the same factor, I think, is at play for Ayesha, where irrespective of what is happening in terms of a Honda, Harley, or other competition coming in from TVS, the market share in a sense has really not got dented. That's part A of the story. Part B of the story is that the stock is not very expensive. I mean, if one really looks at the P multiple for FY25, for a franchise which has margins which are high and which is still growing, 25 times does not make it very expensive. So I think the market reaction, I think, was overdone. If TVS can go up by 25% because of EV, I think the fear in Ayesha, I think, was slightly overdone. Let's look at TVS, Hero MotoCorp, Ayesha, and then Bajaj. I think TVS, Ayesha would be right at the bottom of the quartile. There you go. TVS has hit out of the park, Samant.
Yes.
86%.
But that is also because of the EV.
Yeah, EV, right. Hero MotoCorp has given you 42% return. Bajaj Auto has given you a similar kind of a return. And Ayesha, and it's only when you look at the data, it's 25%. Why? Because they will lose market share. Yeah, they will lose market share, but they are not losing market share. If they're losing very insignificant amount of market share. Could this be the comeback stock of 2024? I would say yes.
Okay, let's see if other market experts agree with you. We'll find out. Time for a short break. Samit, thanks for joining in. We'll be right back.
Back with market right here on ET Now. Let's take our conversation forward on the markets with who better than Sanjeev Bhasin. Sanjeev, hi, good morning. Good to have you on the show. And what a fabulous Friday, Sanjeev, we had. And big FOMO by the FIIs. It's quite evident now in the kind of numbers that we've seen the last 2 days. You think they'll continue to chase banks and IT, considering they were the leadership sectors of last week?
Yeah, good morning, Ayesha. Yes, very, very, excellent Friday, excellent week, excellent end to the year. And yes, the feeling of missed out is because there was a considerable build-up of short positions in both IT and banks, and that is what has seen short covering and now renewed buying on the back of the fall in yields and outlook on inflation being benign. I still think SBI just hit yesterday a new high. Select PSU, select stocks will outperform, but maybe you will plateau on the index. You need some more consolidation. However, there is a slew of new IPOs also which deserve attention. So we are saying there's a mixed bag for you to invest. Try and choose your winners.
So in the consolidation, Sanjeev, what is going to pause in the market? Would it be the sudden move that you've had in the IT index? Would that stall, or you think it'll just be the Nifty bank which will consolidate along with the Nifty if the consolidation were to come in?
Well, a consolidation would be very healthy for the market. You've had a parabolic rise, and from 26th October, the index is up 15%. The bank Nifty is up almost 4,000 points. So give it some breathing space, see some rotation between sectors. FMCG, pharma have seen some profit booking. Even autos, I would say, select stocks can start to outperform. So see your band of winners, see the outlook going forward, stay invested, but little bit of rotation amongst the, new favorites from the old outperformers. That will be the key. And Ayesha, even if we remain in this band of, say, 21,200 to 21,600, for a few days, it will give breathing space for the market and for the new investors. And like I said, there are so many new IPOs which deserve attention. So some money can go over there because there you may have a huge chance of, listing gains over a period of next 2 months.
Okay, fair enough. Sanjeev, let's also get in your take then as to what's going on within the auto space. And in particular, we were discussing Ayesha Motors with respect to the competition impact with the Harley-Davidson, the Triumph Speed, etc. What's your outlook on what the year ahead could bring forth for an Ayesha Motors, given the kind of market share that it currently commands and the price performance that we've seen?
Well, if you use that first initial reaction of the market, Ayesha fell 6% in 2 days on the back of the launch of Harley and the Triumph. And I thought that was a buying opportunity. But, now the competition is definitely going to pinch because as a disclosure at 61, even I have booked a Harley Davidson. It was my dream all throughout, but I could not. Now I thought 2.5 lakh is not, something which is not, it's affordable. And I think that Harley and Triumph are going to gain into market share. However, Ayesha has such a deep-rooted reach in rural areas also, and the growing aspiration is there. So all three may have hit new highs, but I would still put my money more on Hero Moto.
Okay, that'll be quite a visual. Sanjeev, you have to promise us to send pictures of you and your new Harley or videos for that matter.
Yes, Ayesha, it's been a childhood dream. I used to drive the Bullet to college. I was the, fancy cricket captain and so on. But, Harley was something always on my mind, and maybe it was not even at my reach at that time, and it was not, it was not available. But this is a childhood dream of booking and maybe riding it for a few occasions. I will definitely send you a video when I get the, when it comes to my house.
Okay, look forward to that. Okay, that's what we call aspirational Indian. So that's that on Ayesha. But, Sanjeev, you talked about the IPO market and 7 IPOs this week. Of course, none of them as big as Tata Technologies or an IREDA. But out of this list of 7, what are you most excited about?
Well, I'll give you a 8th name on the NSE SME market. And I've done a lot of study on that, and we are recommending. The SME market has taken everyone by storm because there's no participation. The name of the country is Electroforce. It is a consumer electrical play, a B2B play, 18 crore equity and a price earning of something like 6-7 times 1 year forward. This company is diluting equity from the promoter. It has nil debt. It has depreciated all its assets. It has nothing outstanding on the book. And they have profitability of, on a 50 crore turnover of 37% EBITDA, Electroforce, and a margin of 30%. Next year, forward earnings will be 6-7 times to the multiple which they are offering. The management is diluting equity itself. They take home 23 crore and 55 crore of the total offering of 80 crore actually goes into expansion. Next year, this company will do a turnover of 150 crore and a profitability of 35. That's 2.5 times what it is last year. So I think there is a lot of money on the table. This has got a B2B business with Schneider and Siemens and the likes, and they are in consumer electricals and the whole gamut of switch gears. So they are an extremely good entry point at 93 rupees. I think there is a 50% upside in this stock in the next 6 to 9 months.
Okay, let's watch out for a lot of those IPOs. But the other stock that we're tracking on the channel is with respect to the Zee-Sony deal. And just yesterday, Zee Entertainment has sought an extension on the 21st December deadline of the proposed merger with Sony Picture Networks. Let's get in all the details then. We've got Ankur who joins in with that. Ankur?
Yes, Zee Entertainment wants merger deadline to get extended with Sony, and for that a request has been made. Remember, there was an AGM which was conducted on Saturday. In that, there were several shareholders who questioned about the merger deadline to be adhered to. The shareholders also asked question whether or not Puneet Goenka will be CEO of the merged entity. Remember, as per sources, Sony wanted its own India head as MD and CEO of the merged entity because there is an overhang of SEBI investigation which is currently underway against Puneet Goenka, and therefore a deadlock has been created between Zee Entertainment and Sony on who will be the CEO of the merged entity. However, we have reported earlier that Puneet Goenka has stood his ground and he has clearly mentioned that he should be CEO of the merged entity as per the earlier agreement which was signed with Sony. Now, all in all, an application needs to be made for merger deadline to be extended, and also an agreement needs to be reached who will be the CEO of the merged entity for the merger actually to be completed. In the shareholder meeting also, Puneet Goenka clearly mentioned that the next steps will be taken in accordance with the law. So we need to wait and see how soon the company files at the Ministry of Information Broadcasting for the merger application.
All right, thanks very much for giving us that latest update with respect to Zee. Any thoughts then, Sanjeev, now with Zee Entertainment seeking an extension of the 21st December deadline? Because I think you've been pretty bullish on this stock.
Correct, Avanne. Now it's inevitable. You've seen what the NCLT said. They are not going to stall the merger. And I think 8th January is the deadline. It will be a done deal by then. Now, clearly, you have seen the track record of how Mr. Goenka has performed. I cannot comment on that. An independent professional at the helm of Zee will be a big, big game changer. And it is inevitable the wealth creation over a period of next 2 years is going to be from this media company. You cannot have media trade at 25,000 crore on a Zee Entertainment, whereas Disney trades at $2 billion worth of market cap. And I think it is just a matter of time. These are the last hiccups, because it's not letting go by the Goenkas. But I am very, very positive on this stock. I think it's a no-brainer that 400, 450 in 2024 is very much on the cards on Zee.
बतीन साहब गुड मॉर्निंग. मैन्यू की जैकेट पहन रखी है, क्या बात है?
हाँ निकुंज जी, सुबह ठंड है और मैं हैदराबाद और तिरुपति बालाजी जा रहा हूँ आज. तो दर्शन करने भी जा रहा हूँ. थोड़ा ठंड था तो थोड़ा ट्रैक टॉप सुबह पहन के जा रहा हूँ.
नहीं just actually really that वो मैन्यू टॉप है ना जी? That's what I can see from the logo.
Yes, मैन्यू टॉप है.
Nice.
मैन्यू नहीं, लिवरपूल है.
Is it Liverpool? Because I cannot make out actually.
Liverpool
match last evening.
Oh, I missed it actually. You know, after so much of cricket now over the weekends, I'm giving actually sports a big break, so to speak. Okay, I'm going to change gears and talk about IRDA. Yes, it was down on Friday and circuit down on Friday. And there you go, 108. 120 suddenly has become 108. Basin Saab, is it time now to say, ho gaya, in the short term, let's book out of IRDA?
Yes, I would be in that camp. 3-time price to book. It cannot sustain. At this time, you're getting ICI access rather than REC PFC. So I think power, you have to be very, very, wary you don't get short-circuited. I gave you an IPO Electroforce in the SME. Look at the valuation there. Look at the comfort of making money. So do your diligence, because there is enough money to be made over there. I continue to think you can have a better and the best play on PSU now is convert your IREDA into IRCTC. They've just won the business model to become a merchant in catering aside from the railways. And now Tata's, which are the leaders, will have a competition there. IRCTC has 85% EBITDA on the ticketing booking with Vande Bharat, 36% on NEER, and 14% on the catering. I think some parts IRCTC is actually the best business in the PSUs, which is undervalued. I have a target of more than 1,000 on this in the next 1.5 years. So I would convert IREDA and some of the power plays in IRCTC and subscribing to the Electroforce SME IPO.
Okay. Where else you think one should book profits?
Real estate. I think Godrej and DLF have given a stupendous run. They've more than doubled on our books, and we think take some money off some of the IT names. They've given you a very, very superb run. We've been bullish from 950 on HCL Tech. As a disclosure, we have booked some profit over here. But like we said, we are in the rotational game. We have upped our stake in Maruti. We like IRCTC. And like I said, the new finding in the IPO SME will be Electroforce, which can be a huge outperformer in the near term.
All right. Thanks very much for joining in and sharing with us that outlook. Let's move on and get you the latest updates with respect to the sugar industry. And the centre has allowed sugar mills to divert up to 1.7 metric tons of sugar, million metric tons of sugar for ethanol production. Now, this move, remember, comes a week after we saw that ban on sugar mills using cane juice or syrup for ethanol due to the likelihood of a sugar shortage in the country. Let's get in Samir Dikshit. He joins in with all the details. Samir?
Relief to the sugar industry. The government has modified its order on ethanol. As per the revised order, now the sugar industry, the sugar mills and distilleries, they can use sugarcane syrup and juice for the production of ethanol. But the overall cap that government has fixed is 17 lakh ton of sugar that could be diverted for the production of ethanol. Earlier, on December 7th, the government came up with an order which totally put a ban on the use of sugarcane syrup and juice for the production of ethanol. After which we have seen that the sugar industry was in a bit of a confusing state, that they were trying to understand that what is going to be the policy roadmap. The sugar industry met with the petroleum secretary. They met with the PMO officials. Now, after understanding the overall situation, the government has modified its earlier order. And in the recent development, the government has said that to an extent of 17 lakh ton, this could be utilized. The sugar could be diverted for the production of ethanol. If you see the larger picture, now the order says that overall cap 17 lakh ton could be utilized for ethanol production. In addition to this, B heavy molasses and C heavy molasses can also be utilized for the production of ethanol. As of now, the revised order also mentions that the OMCs, they have to issue the order to the sugar mills and distilleries that what quantum that they are getting in from the sugar industry, that quantum has to be decided, that quantum has to be conveyed to the government as well. And sugar industry, mills and distilleries, they have also been directed that a specific amount can only be used for the production of ethanol, not for any other purposes. So this is a bit of relief to the sugar industry, which was seeking a sort of clarity from the government. In addition to this, the government has already said that the overall move is a temporary pause, because they are going to do monthly review meeting and will take further steps after taking the stock of situation.
In fact, let's discuss this a little bit further then. And joining in right now, we've got Prabhakar Rao, President ISMA, as well as Prateek Tholia of Systematics Institutional Equity. Thanks so much for taking time out. Just going to get in a sense then from you, Mr. Rao, given the fact that after it's been close to 10 days after you had the sugar companies, the government directing them not to use this sugarcane juice, now they've allowed both cane juice and B-heavy molasses. What do you believe this spells out for the sector as a whole? Is it going to be a meaningful respite?
Yeah, I think this 1.7 million tons equivalent of sugar getting converted to ethanol, this gives some relief to the industries, particularly those industries who have invested based on the government policy and program ethanol blending program to produce the ethanol out of B heavy as well as syrup. So they had a problem because of this immediate ban. So now they will get some relief. Roughly, it's about 1/3 of the quantity offered. The quantity that was offered in the tenders that was floated by the OMCs, that was coming to about 5.5 million tons. Now this amounts to about 1/3 of that being allowed. So therefore, the problem is solved to the extent of 1/3. And the ethanol blending program is a very ambitious program launched by the country. And a lot of global commitments also have been given. And therefore, the industry went all out in investments to set up the capacities. And we need to now, I think, figure out how do we overcome these problems for the future.
Quantify this diversion of 17 lakh tons. What will that do in terms of giving near-term uptick to the ethanol business? Do you think this will be extended beyond March as well? So indirectly what government said that, okay, don't use sugarcane juice to make sugar, don't use sugarcane juice to make ethanol. And then post April, that would have created a vacuum for the industry. But now that sugarcane is getting diverted for usage of ethanol, do you think post April also there is visibility which has come back?
This capacity that is allocated, probably this will be met within few days. Like, this may be done by maximum before January. It may be even before that, depending on various capacities of various units. Some of them may reach it in the first week of January. Some of them may reach it by second week of January. Then after that, based on the actual data, the government may allocate some more quantity. But still it will be far, far less than the capacities that are created.
We also encourage, Pratik also to join in and share his thoughts on what it means for sugar stock specifically. Pratik, from a market standpoint and for our viewers who want to understand that after 2 weeks of, halabaloo about what would be the impact for sugar companies after the new government directive of only using, heavy grade molasses to make ethanol, now there is a option available to divert sugar. So can I say for sugar companies who are dependent on ethanol production for their profitability, after the recent move of government, it is back to square one?
Yeah, hi, morning. So after the 2 weeks of confusion, I think this is a positive move for the sugar companies. Like Mr. Prabhakar Rao rightly said, that they had put up lot of capacities for ethanol, and typically the crushing season is where you use juice to make ethanol. So once the crushing is over, anyways you would have to move to B heavy or C heavy molasses to make ethanol. So during this period, if you're not allowed to make ethanol by not diverting sugar, that would have left a lot of capacities empty, and of course it would have impacted your utilization levels and your overall margins. Plus the C heavy margins are also lower, so versus juice. So now with government allowing the industry to divert some amount of juice towards ethanol, I think this clearly is a positive move in terms of the profitability that would have happened otherwise if the ban would have remained. So net, I think this is a positive move from margin standpoint, from profitability standpoint, from utilization standpoint, and from here I think the companies, if at all anybody would have cut their estimates, I think they should have revised their estimates upwards now.
Well, thank you for your quick analysis, Pratik and Prabhakar. Really appreciate your time. 63 points down for SGX. Are we in for a soft start? Now, before I say hello and good morning to Sandeep Sabharwal, here's the data for the month of FIIs, foreign institutional investors, and talk about feeling left out, talk about feeling FOMO. In the month of December, what foreign institutional investors have done, and rarely you see this kind of concentrated money which comes, and we're still talking about 2 weeks of December left. Folks, when money is to be made, nobody will think of Christmas holiday. Trust me. If momentum continues, Santa and New Year parties can wait if the market party continues. Now that's the number for foreign institutional investors in the month of December, and we're talking about just 15 days. 30,000 crore. 30,000 crore of foreign institutional fresh inflow has come into market this year. Now let's look at the YTD data. Just to superimpose it, that large part of the YTD data for 2023, I mean, there was this huge bout which happened in the first quarter, but after that it's actually largely concentrated in the month of December. So December, in a sense, after April, and April we are talking about the entire month, December is only 15 days. It's that kind of inflow which really has come back. So Sandeep Sabharwal, everybody is feeling FOMO. But do you think for those who are not getting hit with this FOMO effect, they actually will feel JOMO if they don't buy now?
I think there are people who bought early, so they are not feeling FOMO. So I think that's how we need to put it. Now, I'll say that the FI flows follow a very structured pattern. So it was very clear as the bond yields globally peak out, as the dollar index starts declining, these funds flow will reverse. So it was imminent, it was a matter of time, and it's happening now. Now the pace sometimes surprises us. So obviously, if I haven't tracked the exact number, but you said 30,000 crores in December. Obviously, it's a huge number. And once that happens, it drives the large cap valuations higher. So that's the state we are in. But markets are looking stressed near term, not only in India, but also globally. So some give back is possible. But in bull markets, give backs typically last a few weeks and corrections are swift, but should be restricted to 4, 5 to maybe 7%. So as that happens, people who are feeling FOMO now should be ready to invest, because the people who are feeling FOMO today, they don't feel FOMO when the market corrects. When it corrects, they want the market to go down further before they buy.
I have a limited point, Sandeep. All I'm saying is that, okay, right now everybody is feeling FOMO. I mean, over the weekends when I met my friends, trust me, not every second conversation, every conversation is now centered around the exciting things which are happening in the capital market. So my point is, rather than feeling FOMO, just wait it out. After 3 months, you actually will enjoy the feeling of JOMO, joy of missing out, rather than getting hit with the FOMO, compulsive factor. So you think that is a better strategy? You missed it. Don't jump in now.
So there are 2-3 things, Nikunj. One, there is no missing the bus in the stock markets. You miss the bus, another bus comes after some time, you catch that. So this entire FOMO thing is bad for health. Secondly, I'm not predicting a major fall in the market. I don't think that the economic outlook, the interest rate outlook, and inflation outlook, which is there today, represents the possibility of a big sell-off. But there will be corrections. So as those corrections play out, that time should be used by people to buy. Secondly, what happens is once such kind of runs come, people lose interest in small mid caps which are not in the F&O segment, and the trader interest shifts to the F&O segment. So that could create more opportunities on the broader markets over the next few weeks.
I'm curious to get in your take as well as to what's going on between, banks and IT, and in particular that come back within the entire IT space. Just earlier this morning, Nikunj was alluding to the fact that there is still headroom for more upside, but perhaps not much money to be made when it comes to some of the large cap stocks. Where do you stand when it comes to the comeback that we've seen within IT, in particular the frontliners?
I would agree with Nikunj's view. There could be some more headwind, but not significant. Because finally, even in a strongly reviving year, these companies are now going to grow at 7 to 10%. they are not going to grow at 15-20%. And so to that extent, we need to be cognizant of the valuations which can be given to these companies. And they are already trading above historical valuations.
I want to just take a minute and understand IRDA, Sandeep. What should one do now? 35 became 120, 120 has become 108. Now, 120 का 108 हो गया. Is that good enough to warrant entry into IRDA, or even at 108 one should avoid it?
Because this is the meme stock of this current cycle. So people don't know why they are buying this. They are just buying it. And we've seen historically, many of these companies can half from the top. So people should be very careful what they're doing.
Okay, meantime, let's get in a take as well as to what the outlook is from you, Sandeep, when it comes to some of these buzzing stocks within the entire PSU space, because that has really seen a pretty phenomenal move this year. Do you believe that the next year ahead as well holds promise?
So selectively it will, but the overall value paradigm has now changed. Now most of these PSUs are valued as growth companies. Now the issues related to bureaucratic decision making, the way they are run, etc., everything remains. So in a nutshell, I would say that the upside across the spectrum looks limited, but some companies, especially in defense, given the sort of orders which are coming in, they are so huge, they could still hold on and trend higher.
Okay, fair enough. What about the move that is expected to be seen on the entire sugar space, given the U-turn now taken by the government and the relief being given to the entire sugar basket? Sandeep, where do your preferences lie?
So I'm not still buying fresh. So we do have some exposure in Balrampur, which we have not sold. But I think these are very incremental moves. So what this will do is it will improve realizations from the ethanol segment, stop the fall of sugar price to the extent it could have happened if the entire diversion had been banned. But it's still too little because last year 3.8 million tons were diverted. This year plan was for 4.5. Now they are being allowed 1.7. So still there is excess, and still there are huge unutilized capacity on the ethanol side. So we need to see the follow-up. But I think as the May elections come nearer, that might present better opportunities to buy into these stocks, because I think post-elections, the ethanol program will be back on track.
So what's interesting here is, we talked about FIs coming back. Yes, they've come back. 29,000 crore. We're still counting. 2 trading weeks are still left. So this is going to be in record month. It's only 4 times in last 5 years we've seen this kind of a concentrated move in the market and this kind of a concentrated buying. Now the general thesis was that FIs will come back and they will buy Reliance. They will buy HDFC Bank. But in this month, Reliance is still underperforming. 4%. It's only a 4%. HDFC Bank, the real first port of call for any institutional investor, in this month it has appreciated by 6%. Sandeep, the classic wisdom was FIs will come back and they will buy Reliance with one hand and they will buy HDFC Bank with the other hand. Now FIs have come back, markets have gone up, but the two sumo stocks of the market or the Nifty have not gone higher.
Because there are opportunities across the board now. So capital goods is an opportunity which was never there. Infra companies. So people never used to, FIs used to allocate very less to a company like L&T, for example. So that's a bet where people are playing. On the banking side, the options are much more now. So there are preferences for people on other banks, other NBFCs. So I think the FI investment basket has got more broadened vis-a-vis what it used to be a few years back. And that's a phenomenon which will continue.
Okay, now let's go back to GM Financials. In Uresh's language, this is a stock which has consolidated for 7-8 years, and I think in last 3 months it has started moving higher. See, Uresh, I'm learning your tricks now. 5-year ka chart consolidation dekho, and then the breakout gets up. Is GM in that category?
I think it's a much longer consolidation. The stock has done nothing from the 2015-16 prices. The stock used to be 80 back in 2016, outperformed in 2017 and then went nowhere. And what we've seen, all the broking and financial related stocks have done really well. So IFL Securities has doubled up in the last 6 months. You've seen Angel One do really well. You have Motilal Oswal hitting new 52-week highs. Even smaller names doing well. So JM Financial was the last one to do so. On Friday, that was the first indication in terms of the breakout took place. But what is interesting is it saw almost a 10x volume jump up or even more than that. So it's not just price action, the volume has been interesting. So finally, time for the stock to outperform. The whole sector has turned around. The NBFC space, broking space, etc. So out here, it's a buy at current levels as well as on dips. And I would have a target price of closer to 125 to 150, which could come over a short to medium term. So good price volume action, a breakout done, and the whole sector looks promising. So this could be one more stock which could do well. So a buy at current levels.
Up for a 7th straight week, sitting at all-time highs on the Nifty Bank, on the Nifty. You were mentioning last week that you would keep some powder dry at least for whenever there is a dip in the market. At what level would you put fresh money to work?
So Ayesha, my view is that, and based on historic trends, normally bull market correction should be around 4 to 7% broadly, depending on the move which has preceded the run up. So this run up has been around 15%. So I think 5-6% correction is somewhere I would be happy to allocate into.
Sandeep, so let's look at a list of stocks, and I just want to put this perspective. Why am I asking Sandeep this question? Because Sandeep has this ability to really identify large cap and small cap stocks which are contra in nature. For example, it was PVR Inox at some point in time. It was buying Mahindra and Mahindra, completely contra. Nobody liked it. So if you have to make a list of large cap stocks, when I say large cap stocks, pretty much part of Nifty 50 or in and around Nifty 50 levels. What would be your 3 large cap ideas or semi large cap ideas for 2024?
What I think will outperform and what be a contrarian bet would be stocks like Tata Steel and Vedanta. Now, whether I'm buying that or not, that's a question mark. I'm very reluctant buying into commodity stocks. But I think after so many years of downturn and no ownership, etc., we see those stocks actually come back. Any risk taker, I think, can allocate to those stocks. I'm not sure whether I'm buying or not.
Why are you not buying them if you think they could be outperforming? This simple hai.
So I'm very reluctant buying into commodity stocks per se. So that's the reason.
Right. Okay. So other than commodities, Sandeep, if at all there is a dip in the market, where would you be a buyer?
In the large cap side, I think it's very so we could buy into ICICI Bank. That is the preferred bet. And then Maruti, I think that's one stock which has not performed at all, although most of the other stocks have moved up. So that I think still has decent value.
1,000 rupees for Maruti. Nuresh, since we are with autos, I want to throw in one more name in the melting pot, which is Ayesha. Frankly, if I look at Ayesha versus Hero Honda or Hero Honda versus Bajaj, and if I compare that with TVS, Ayesha has massively underperformed this year. TVS is up for 3rd year on the trot now. It's been a comeback year for Hero MotoCorp. Bajaj has done rather well for itself. Do you think somewhere Ayesha has got makings of a comeback in 2024, Naresh?
So out here in the auto pack, if we notice the names which have done well over the last couple of years have been ones which went through a long period of bad return. So it started off with Mahindra and Mahindra, which was not doing well. Even today, Tata Motors, after such a move, is not a great return over a 5-8 year period. So that has been the catch up. TVS Motors has been one stock which has continued to do well. So out here, Eicher Motors, the problem is the stock had a huge cycle back in 2010 to 2017, where the stock was almost a 20-30 bagger. So that overhang continues. So as of now, yes, it's a short-term breakout, but the relative choice is a problem whether one wants to go with a Hero MotoCorp, which has done nothing for almost 8-10 years, or you want to go with Eicher Motors. So my choice would be to go with Hero MotoCorp, wherein it could surprise over a period of time. But yes, in the near term, a short-term breakout done on Eicher Motors, wherein the upside could be closer to 4,400, 4,500 in the short to medium term. So it's a trade, but I think over a period of time, the other names could outperform.
Okay, from large caps, let's now move to mid and small caps. Sandeep, we'll let you go on that note. Good chatting with you as always. Naresh, start off with you only. What's the mid cap list looking like?
So I'll continue to focus on the banking space. So that is where Federal Bank comes in. Continue to like the stock. The stock has consolidated well after the breakout. Big base formation also happened around the 120, 145 mark. Yesterday, the stock came very close to a new all-time high. One of the best performing mid-cap banking names. Stop loss now at 152, target price of 175.
Okay, and Kunal, what about your mid-cap ideas?
So one of the stocks which I flagged off on Friday morning was Amber Enterprises. That was stock which was coming out of a major correction consolidation. So even at current levels looks attractive, and my sense is that the setup for the stock has been more of a recovery as well as a strong pickup of price action. So 3,500 remains to be a target. Would suggest a buy with stop loss at 3,200.
Okay, let's take a very quick break on that note. When we come back, we'll be well into the pre-open rates and counting down to the market this Monday morning.